fundsupermart.com.
Hi Renzo, how different is the investment landscape for global resources compared to 2 years ago? Can investors expect similar return forward?
I think the important differences that we see now versus two years ago is that, one, the valuations are quite attractive for the resources sector. The second point is that earnings momentum appears to be plateauing, and there is a diminished risk of earnings downgrades in our opinion. And I think the other important development in the last 2 years is that management has rediscovered financial discipline, and it's more aligned with shareholders. So we're seeing that more discussion about capital management initiatives by these companies, and also they've been increasing their dividend, and they've done so because they're bringing down the cost of operating and decreasing their capital expenditure, pushing out the development of projects. In the last 12 months, what we've seen is that the resource sector has started to perform in line with broader indices. Previously it had gone through quite a period of underperformance. But a lacking ingredient in terms of getting stronger performance from the resource sector is some confidence emerging in China. If that confidence was to emerge with the cheap valuations, then I think the sector will start to perform quite strongly.
What are the themes that have done well for this sector over the past year?
Basically, I think the energy has been a focal point of our portfolio over the last 12 months, and energy has performed much better than mining has in the last 12 months. And it's really our focus on the exploration and production companies, particularly onshore USA, where we've seen companies like Concho, Pioneer, EOG Resources perform quite strongly. The United States is going through quite a renaissance in terms of oil and gas production, and it's doing so because of technological advances we've seen in fracking and horizontal drilling. And these companies have been beneficiaries of fast production growth, and which is leading to improved earnings growth.
Russia is one of the world's largest mineral and energy supplier. In your opinion, what are some scenarios you expect to play out from the Russia-Ukraine tensions, and how would the tensions impact the resources sector?
I think what we need to see is is a deterioration of those tensions between Ukraine and Russia. Then that could have implications in terms of gas coming through the Ukraine into Europe. It might also mean some embargo or trade sanctions being applied to Russia. In that advent, then we might see gas prices and oil prices rise, and we would be beneficiaries of that. When I say we, the fund would be beneficiary of that, because it hasn't got any exposure to the Ukraine or Russia, but has exposure to other oil and gas producers in other geographies around the world. So they would benefit from an improving price and being able to sort of send volume to Europe.
Why should investors enter the global resources sector?
I think it's really the key messages on that is that one, we have a valuation case. The sector is cheap relative to MSCI World. It's cheap relative to itself, and earnings momentum is plateauing, and as I mentioned before, we think that the risk of further earnings downgrades is diminishing. Management are more focused on improving shareholder returns, and what is the missing ingredient is really some confidence in China. And if that confidence emerges, then I think this sector should perform quite well. Demand for commodities remains strong, and what we're seeing is that demand for commodities is exceeding supply, so we're seeing inventories decline, but that hasn't translated into higher prices as yet.
From the ground, we see strong interest in gold and gold-related securities. What is your take on this?
Basically, in the beginning of this year, the gold sector started to look quite cheap relative to other mining sectors, and we saw a recovery in gold stocks in the first 3 months of this year. And what we've done is we've been reducing our exposure to the gold sector, taking advantage of the strength in gold equities. And what we saw, one of the key moves was that Cisco was bid for by Goldcorp, and we saw that the share price of Cisco move up quite substantially. We also saw a counter bid, and we reduced our exposure to the gold sector by selling our Cisco position.